Good morning, everybody. Welcome back. So, I want to talk to you today about the bear market that everyone's referring to, and why I don't think the bear market is something that you should really entertain, and that the vast majority of the downside price action is likely taking place already. I'm fine to be wrong, but I don't think I am, and I'll tell you why. So you have to bear with me on this one because, like I say, I do have the old Megatron virus myself, and I'm a little bit slow, lack of sleep. We've got kids around, everyone's locked down. It's actually a bit of a nightmare at my house at the moment because we're all technically ill, but actually we're not really that bad. The kids certainly feel, if anything, that seems like it's just giving them more energy. So I don't know, it's a bit crazy around here. Right, so just bear with me on this one, okay? Try and hear me out. So what I'm going to talk about is that there is TA involved, but there's also a larger thing at play. And this, like I say, if you're on my Twitter or if you've followed me for a while, you will have recognised that I did reference this. This was likely to happen. There's a good chance that this would happen before it happened. And there's a pinned tweet for all those who want to see how awesome I was. But it's not so much about blowing my own trumpet. It's about recognising that TA does go a long way, and it is very good. But there are sometimes reasons why we have to think outside the box to get some of the other information we need. And it's not something I normally do, but this was a very it became more and more obvious that something like this was likely to happen, and which is why I made a couple of warning videos prior to it happening, and why I'm talking about what I'm going to say today. So, like I say, we expected this, we got it. I said, look, a wick down to the low 40,000s. That's exactly what happened, 42,000, and then bought back up. It was a buying opportunity, is what I said at the time. So if this happens, it's just a buying opportunity. That appeared to be relatively accurate at the time. We were hashing out this area, but as we dumped down into here, I said, look, it's a buying opportunity if we come down here, but then we need to establish a range. My expectation is that the range will be about 40,000 to about 49,000. This could be known as and classed as technically an accumulation zone. Now we can have wicks down below this area, that's fine, and to be honest with you, the amount of fear that's in the market right now, that wouldn't surprise me at all. That would be one of those wicks which basically wipes out the last few believers before we actually do turn around. So don't get me wrong here. I'm not saying that $40,000 has to hold. A wick or two can easily take place, and we've got an incoming death cross here on the daily. These are often red herring events, like the death cross that took place here is basically the move had already happened, and then we came down to make a double bottom. So I'm not saying that doesn't have to happen. What I want to talk about today is what I think this entire thing is about. So if you pay attention to stocks, commodities, and the traditional markets in general, what there is at the moment is there's something called tapering, right? So the money printers were turned on after this, which is a carbon copy. This is a carbon copy of this event. This is why I said I think we're going to get one of these. It wasn't based on the chart. It was based around what I felt like was deja vu. It felt like exactly the same thing that happened in March 2020 was happening all over again, which is why we were able to crush the market, whether it's preserve our gains, short the market, buy low. Because we'd been here before. I had definitely been here before. I think a lot of you had probably been here before, and we were able to recognise that. So the difference is that when this happened before, the markets across the board, traditional markets were hammered, crypto was hammered, everything was hammered, and then governments across the world decided that there was no other alternative but to actually turn some money printers on and create a bit of a party, because around the world, as we all know, things were closing down. Airports, hospitality, this, that, and the other, all closing down, going into lockdown. The economies were going to they were going to crush, they were going to crumble, weren't they? And they began to, and technically they did for a little while. The only way to deal with that is to actually inject cash into those economies from a money printer, which is what happened. And essentially we created an enormous party, a party that ran across the board for stocks, commodities, and crypto. We had a great time, right? Then what's happened recently is that the money printers have been turned off because inflation is rising for everyone. Inflation's going crazy. There's only one way to really deal with that, is to turn those money printers off. And the Fed, for instance, because we're mainly going to reference the dollar, because it's the dollar which is the important component to this, because cryptocurrency is largely traded with crypto dollars, stable coins. We were talking about this yesterday. The stable coins aren't really that stable because they're pegged to the dollar, which looks looks like this, which isn't really stable, is it? I mean, that's not stable, but that is essentially the dollar, and that is your stable coin, right? So so that's not a stable chart, but it is a dollar index, and that is your stable coin that we're referring to. All crypto is largely traded with with stable coins, right? It's a very, very large component to, well, it's the most traded asset, isn't it, Tether? So with that in mind, the dollar is going to increase in value as money printer has been turned off. Simple as that, right? The party's over, and we're getting a bit of a hangover now. Quite a nasty hangover, because the party's been going on for too long. This wasn't just a casual drink at the pub. This was a full-on, starting off with 2 lines, couple of pills, and along the way we decided to go for the crystal meth. Then after the crystal meth, we started to come down, so we did an 8-ball, and then from there we did have a crash, and then we just did it all over again and carried on going. That is the kind of party that all stocks, commodities, and crypto has been in. And so inevitably, you can't stay that high for that long. You're going to have to come down at some point, and that's what's happening now. And the Fed recognised that. Says, all right, the party's over, guys. The party's over. Don't worry, though. If you go home, get some sleep. I'm pretty confident the economy will recover naturally. I think our economy can handle it, which is why we're going to turn the money printers off for the moment, to try and sort out this inflation issue that we've got. And like I say, all governments, from my understanding, have got this problem because of the way that they've dealt with the situation, right? And so this is the only thing they can really do. And so the money printers are off, the hangover has started. So yes, we do have a carbon copy event from March 2020, but unfortunately the money printers are off. So rather than the party starting here, this is, like I say, the party began over here like it did in March 2020, so a carbon copy replica event, but rather than going straight in for the crystal meth, unfortunately all we've got now is dirty water, and that you can't have much of a fun time drinking that. And that's what we've got at the moment. The money printers are off, the dollar is increasing, the downside is continuing. There's no party here, I'm afraid. You're going to have to go home and sleep it off. But because they think that the economy is likely to recover naturally, it means that once you've had a little rest and a sleep, you can come back and we can have a more civilized party, wine and cheese, games of charades, and it'll be a wholesome party rather than one of these absolute tear-up 3-day Glastonbury events. We can just go on to be more civilized and run a healthy economy. So hopefully that analogy made perfect sense to you, but all I'm saying is that the dollar is increasing in its value. This is a weekly, right? The weekly's been in an uptrend. We've spoken about this for months now. The weekly is in an uptrend. The weekly is currently looking to push, the dollar is currently looking to push up to 97, which is pre-pandemic levels. If that breaks, then we are going to go up to 99 to 100, which again is all part of the pre-pandemic levels. That is very possible, and that would impact crypto. Doesn't necessarily mean that it has to push crypto down. It just means that it's unlikely to help crypto move straight back up to the same extent that it did in the past. It's counterintuitive. It's very, it's not as simple as Dixie up, Bitcoin down. It's a matter of, if you think about what I'm saying about crypto dollars, Tether, USDC, BUSD, they're all pegged to that. So if that becomes the better asset to hold because that's going up and this is going down, then in theory you're better off holding into a cash position, and that's what a lot of people are doing across the board, right? The dollar increases. Where's your money best? In stocks, commodities, crypto, or dollars? Probably dollars, at least in the short term. So yeah, that's what's happening here. We're in a hangover period, right? But based on the chart itself, $40,000 is actually holding okay, is as expected, right? Doesn't mean that it has to hold. Go to the 4 hourly, there's a battle taking place here. We're looking to turn up, hopefully make a positive cross on the MACD. We're slightly oversold here with bullish divergence on the RSI, and the money flow index is turning up. There's small incremental steps that we need to take to reclaim these zones. On the small term time frames like the 4 hourly, there is some possibility of a little bit of bullish move today. But on the longer term time frames, even from the 12 hourly onwards, there's really nothing of any significance to talk about other than trying to catch knives at this incremental level of roughly $40,000. Now, I had on my video yesterday, I did say I've got a buy order at 40,600, and unfortunately, no, you couldn't make it up. It missed my buy order by $10. So be it. So my buy order unfortunately still sits but we may come down there again, and this is what I'm trying to explain. Like, the money print is off, the fear and greed index is reading at a 10, and if we think about the Bitcoin chart on the monthly, there is a super resistance area where we could have a wick revisit, and that's between 35,500 being the center of this monthly Bollinger Band, and about 37, which is the 21 exponential on the monthly. Now, that is your last line in the sand. Candle body closures, especially on a monthly below these areas, would imply bear market, and we could entertain the ideas of the low 20,000s to potentially 19,000 and see where we go from there. But we're not at that level yet. The line in the sand hasn't been crossed. We're still technically in bullish long-term picture with Bitcoin. And for those who want to talk about the Dixie and say, but the Dixie's going to die, man. I read it on Twitter. Well, if you think about it in the short term, it's not dying, is it? It's not dying. It's going up in value, and that's driven by on a fundamental basis. This is how the dollar is controlled, and it's being controlled at the moment. That's fine. That's monetary policy, all right? But I see what you're saying, and if you go to a monthly chart, you might be onto something. Yeah, so Max Kaiser and all these other people, they reference this, and it's true. The dollar generally, like all currencies, is in a downtrend and will be in a downtrend forever, because money gets printed all the time, and it has to go down as a matter of default. This is why Bitcoin is what it is, and people believe in it to the extent they do, in almost a religious fashion, right? So that is perfectly normal, right? That's normal monetary policy. All charts do that. It's like looking at Satoshi pairings, isn't it, versus Bitcoin. They all go down versus Bitcoin. All money indexes generally all just go down like that. Just because the nature of monetary policy, right? Have to create more money. You just have to do it. It's all about the speed that you create that money has drastic implications, and that's what's happening here. They're turning around that monetary policy. They turn the money printers off, and the dollar's increasing, and then almost it's like a speeding up event, isn't it? Money printers are turned off, people go into cash because they've been told to, essentially because of the tapering. Let's wait this one out. In fact, let's go home. Think of the party analogy. Money printers off, the drinks have run out, let's go home, we'll come back another day and start a party all over again. That's what the sensible people are doing, driven not so much by charts but by the fundamentals of what it means, the implications of money printers being turned off. So with that in mind, let's just recognize that the Bitcoin chart is only one part of this downtrend. The downtrend was natural to start with, a consolidation basically, then the virus caused this, and then the tapering has caused this further downside, which may even bring it a little further down. But overall, it's not what people think. It's not the bear market that would naturally have occurred due to its normal looking chart, right? The chart doesn't suggest it's time for a bear market. There's no component of the chart which suggests bear market. It's not what I think is likely to happen. It's not the most likely outcome. I don't think we're in a bear market. I think that all those things that I've stated above, if you can get your head around those analogies I've been on about the party, and we're in a hangover period at the moment, that should be enough for you to recognize what it is that's driving this downside, not just with Bitcoin, but if you look across the board in traditional markets, major indices are down, lots of stocks are down, and they're all down because of dollar strength. Now, the dollar strength is increasing in its strength because of tapering, and to make things worse, we had one of these calamity events, a black swan event to an extent, although it wasn't that much of a black swan because we saw it coming. We talked about it before it happened, and we crushed the market, didn't we? Because it was almost like we'd been here before. We had been here before, but the difference is that the money printers, rather than being turned on again, and the party go into a crystal meth fueled rave, has actually gone into a pretty depressing end of the night, crawling around on the floor in a squat type vibe, really, and that's what's going on. So it's not, in my opinion, bear market. It's a fundamental issue driven by monetary policy that I was trying. It's still quite early here, but believe it or not, I've been up since 5. That's trying to combat inflation, and that's what's having such a negative implication on Bitcoin. It's not so much the chart, although the chart is useful, which is why we're able to miss our buy orders by $10. These still have relevance to them at the moment. The overall problem is the monetary policy of America, which is in control of the Dixie, which has implications to stable dollars, which are Tether and all this lot. So I'll leave that one with you there. Hopefully you can get your head around that. I suppose it's quite early for you. It's not as early as it was for me, but it's not the end of the world. Like I say, there are charts to be traded. There are potential turnaround points. We are likely at the bottom already, if not very close to it. And if we do break down below that monthly Bollinger Band, then yeah, we can talk about bear markets then. But for now, I'm all okay, and I'm like I say, the best thing to think about is recovering from the party that we've had for the last 18 months, sleeping it off, and getting ready for a more wholesome party, which involves a lot less illicit substances and a bit more of a healthy vibe. Maybe like a juice party. Do you know what I mean? A healthy vegan juice party is what's likely to occur, according to the Fed. The economy can handle this. We're going to turn the printers off and deal with it. Now, also, just to note, the Fed aren't stupid, right? They don't want high inflation. That's why they're trying to deal with it now. But they also, they wouldn't shoot themselves in the foot if the economy appears not to be that healthy, or if the Biden administration or whoever runs the country decides to lock down again. They will adjust their monetary policy accordingly. They will slow the tapering again, and so the economy will not crash like everybody thinks it's going to crash. I believe that currently the downside in the short term has pretty much already been felt, and a turnaround is likely to occur. It won't be super fast and massive, but it will turn around. We're just all suffering from a hangover, basically, and that's the problem. Right, this is a long video. It probably made no sense. Please let me know in the comments if it made no sense, and I'll probably try to work on my analogies, or basically get rid of them altogether. I just thought it was a good way to look at it, to be fair, and trying to understand what's actually taking place in all markets right now, especially crypto, because people think that crypto is decoupled from everything else, but actually, when you were talking about correlation to the dollar index, it's highly linked, because we all know that Tether is the largest traded crypto in the world. It's not Bitcoin, it's not ETH, it's not anything. It's Tether. And what is Tether? It's a crypto dollar. And so if we're talking about American monetary policy that affects the price of a dollar, obviously it's going to have implications to crypto. Massive implications. Right, so I'll leave it with you there, guys. Thanks for watching. I hope you have a nice day. Take it easy.